All right, let's head straight to the commodities market now. We have Dumebi Oluwole joining us right here in the studio. Great to have you, Dumebi.
Thank you so much, Laddie. Good morning.
Yeah, so much data upon us yesterday from the MBS. And one is in capital importation.
Yes.
And that rose by 210%. That's good news.
I mean, it is. It is. I don't want to be a Debbie Downer,
right.
but yeah, it's good news to see that, we're seeing some, inflow of capital into the country. A very important thing to actually notice is the type of investments that we're actually getting. And primarily, it was an increase in hot money, foreign portfolio investment.
Hot money again.
Yes. So, and a very good thing, a very good pointer to the fact that this was actually going to increase is the fact that from the NGX's reports, weekly report, or even monthly report on foreign portfolio investments into the stock exchange, you see that it had been increasing over time. The level of inflows versus outflows was just up until, I think, I would say May. I think between April and May, we saw like the outflows becoming more than the inflows, and that's just very evident of one of the things that happened between those months. But regardless, we've seen an uptick in foreign portfolio investments into the country, and a very good reason for that is the structural reforms. We've seen Fitch, Moody's, and even the IMF come out to somewhat commend the federal government and the CBN for the recent changes that they've made to Nigeria's monetary policy structure, really. And a very good thing that has happened, even though we're still seeing the returns on investment, still negative, but because interest rates have increased substantially compared to last year and even 2 years ago, we've seen that the gap has narrowed with inflation somewhat, and investors are a bit more bullish on some of the securities and investment options that they have in Nigeria today. So, but primarily as an economist, I cannot help but mention the fact that we do need more stable type of investments coming into the country. Hot money is good, yes, but if we do get more of foreign direct investment in terms of businesses staying in, more capital, the longer term effect of that, or the ripple effect on the economy, is more substantial in terms of productivity and job creation. And that's primarily what Nigeria needs today. And unfortunately and fortunately, I would say that somewhat sits on the table of fiscal authorities. I remember the last time I came, I was very, I was very hard on the fact that we do need to see more complementary moves from the fiscal authorities to support what the monetary policy authorities are doing. A very good thing that has happened so far is, I think just this week, and it started off, I think yesterday, is the fact that the CBN is trying to ensure that, the forex market is more cohesive. There's a lot more reduced bottlenecks. I think they removed the price verification system to ensure that form-M procedures for traders are a lot more seamless. So we're obviously seeing a lot more moves from the monetary side, and we need to see more complementary things going on
from the fiscal side at this point. But looking at the data, obviously FDI didn't do as well as foreign portfolio investment, but we have FPI, at this point. So talk to me about what we can actually do with what we have, even though it's hot money.
Hot money. I mean, hot money, just like what is easy to come in, also easy to go out, right? And that's one of the reasons why globally and domestic economists don't really advocate for us banking an economy's sustainability on hot money. Simply because you notice most of this hot money actually goes into the stock market. Once they buy the stocks, and before you know it, it's all out, right? And they're more short term because they're foreign portfolio investors want money that they can want investments that they make, then they're able to get their money out quickly. And until we're able to see this more, and what that basically just tells us is that while we're seeing this inflow of money coming in, it's still not sufficient, because what Nigeria needs, we need long-term fiscal sustainability. We need enough forex to come into the country so that we're not seeing this much swing in the naira. We also need enough forex to come in so we see the naira appreciate substantially towards the targets that these reforms have, put in place, and that's around 700 to about 800 naira to $1, and we're still very far from that. See, the naira, even though it appreciated, we're seeing 1,500. 1,500. Exactly, and that still goes a long way to affect businesses. So two things to mention here. Even though this is a good thing in terms of we're seeing money coming in, how much of this money is actually supporting the businesses that use naira and dollars as well to import and even export, right? So because this large inflow of FX that we're seeing at a particular point in time, because this is just a flow, it's not a stock, meaning that if it's not balanced, if it doesn't stop at some point, right? If it's not, for lack of better, I'll say stock. If it is not, if the stock is not stuck,
right,
for that particular point in time, we won't be able to do so much with it, right? And by stock, I just mean money that we can use to, keep building up the economy, not money that comes in and in 3 months it's out. It's out. Or money that comes in and in 6 months it's out. So that's one of the reasons why, even though this is a very good news, it's important that we don't take our eyes away from what is truly important, and that is long-term investments, long-term capital. Because the end goal here is not to just resuscitate the economy for a short time. We want the economy to live long. We want the economy to breathe well.
Right.
And for that to happen, we need long-term capital. We need productivity to be at its peak, right? And right now, that's not happening. And until we see that...
it's still going to be hot money.
Yeah, it's still going to be hot money.
All right, let's look at the PMI. We're seeing it drop to a 7-month low.
Yes.
Still above that
50%, yeah, 50
mark,
points. Yeah.
But it's a big drop from about 52%.
Yes, it is. And that's the conversation about productivity I'm talking about, right? What this just tells, because PMI is broken down into five or six sub indices, right? We have output levels, we have new orders, employment, supplier delivery time, business confidence, right, and inventory. And when you look at the breakdown of all of those things, you realize that even though to some extent output levels have somewhat improved compared to maybe the beginning of the year, you see that demand is very low, and that is affecting businesses, right? Business confidence is also very low because we're still not seeing cohesive fiscal policy initiatives that will support businesses, right? So businesses are saying, okay, in the long term, even though I won't say I'm making so much profit now, but I would say even though things are looking a bit better now, how about the next 12 months? There's no stability. There's still so much uncertainty going on in the economy. How can I project for today up until the next 12 months or even the next 6 months? And you say a lot of businesses in Nigeria, particularly FMCGs, are very bearish, and that again disincentivizes the kind of long-term investments that we need to sustain the economy, right? Then when you also look at new orders, if people are not buying the stock that you've taken up today, how are you able to get new orders for the next time, right? Then you also look at supplier delivery time. That has substantially shortened over the past few years. Reason being logistics issues, an increase in transportation costs, increase in distribution expenses, right? And the longer all of these issues remain, supplier delivery time as well will remain low. And that also disincentivizes businesses. You find that even though some businesses are actually finding ways to work together, to collaborate, to ensure that they're able to mitigate some of these issues, they're still struggling substantially. And remember that the kind of businesses that this PMI tracks are primarily small private sector businesses that have been hard hit by the Naira, depreciation, or the Naira swings, high interest rates and all of that. So again, to some extent, I do think that this decline would probably remain for like the short term.
Right.
And this also is a pointer to what our GDP growth would look like for the next quarter.
Right.
PMI is a forward-looking indicator to GDP growth. An example would be if you see substantial increase or substantial expansion in GDP, in the PMI numbers for I would say the first quarter of the year, it kind of gives us a pointer that okay, GDP growth might come in higher. And remember, our GDP grew about 2.98%. For a developing economy, that's substantially low. And when you look at the average of GDP growth over the past 5 years, you see that's an average of about 2% for an economy that's supposed to be, the giant of Africa and supposed to be producing a lot more.
So much impact there.
Yes.
Definitely. But yeah, it's still above 50 points, mark.
Yeah.
Hopefully we get
somewhere.
Improved.
Yes.
Thank you so much, Dumbi Oluwole. Always great having your perspective.
Thank you so much for having me.
All right, now, so let's just have a view of what played out in the market yesterday. It was a marginal loss for the first trading day of July, and we see there 0.04%, but still above that 100,000 level. That's for the all-share index. Equity cap sits at 20. Down about 20 billion for yesterday's trade. Let's get a check on the trading activity. We see trading activity was somehow subdued, but it's all red for the counters we track. Banking, consumer goods, and insurance, all down for yesterday's trade. So it was definitely bearish. That's it from me on Business Morning. We'll give you a summary of the stock market close for today and details of the FX, market. Thank you for watching. I'm Ladi Williams. It's back to the Sunrise Daily team.